In a shocking turn of events, the American car market is experiencing a catastrophic crash, with used car prices plummeting by 21% overnight. This rapid decline is reminiscent of the volatility seen in cryptocurrency markets and is sending shockwaves throughout the industry. Reports indicate that on average, prices are dropping faster than anticipated, leaving millions of Americans grappling with the fallout of the auto loan crisis. The number of individuals falling behind on their car loan payments has surged, with delinquency rates reaching levels not seen since 2010. It's a dire situation that's leaving many car owners struggling to keep their heads above water financially. The root cause of this automotive turmoil can be traced back to the peak of the market, when a record-breaking 15 million cars were sold at inflated prices. Buyers were willing to pay well over the manufacturer's suggested retail price, often taking out loans that exceeded the value of the vehicle itself. This reckless spending and overborrowing have left countless Americans buried in debt, with little hope of resurfacing. Now, with a looming tsunami of financial trouble on the horizon, over 100 million Americans find themselves underwater on their auto loans. It's a perfect storm of overspending and overborrowing, and the consequences are dire. Dealerships are struggling to move inventory as buyers retreat in the face of uncertainty, exacerbating the downward spiral of prices. But amidst the chaos, there may be a glimmer of hope for savvy buyers. The rapid decline in used car prices presents a unique opportunity to snag a bargain unlike any other. For those willing to navigate the turbulent waters of the current market, there's a chance to secure a deal of a lifetime. Now imagine you bought a car for $40,000, rolled taxes, dealer fees, and everything else into that loan, maybe walking out with a $47,000 loan. Fast forward to today, and that $47,000 loan is tied to a car worth only $30,000. It's a harsh reality that many are facing. People are standing in front of their homes or apartments, staring at their cars, and questioning why they should pay off a loan that exceeds the value of their vehicle. It's a tough decision, but for many, the answer is clear. They're handing back the keys. This movement is gaining momentum as more and more individuals refuse to be shackled by loans that far outweigh the value of their cars. The Cox Automotive Manheim Index paints a grim picture, with used vehicle values plummeting a staggering 21% from their all-time highs. And the hits keep coming, with values dropping another 1.6% just in the month of January alone. It's a downward spiral that shows no signs of slowing down. But the real bombshell is yet to come. Car manufacturers are gearing up to make a move that will shake the entire auto industry to its core. Auto dealers, lenders, and consumers alike are bracing themselves for the impact of what's to come. Taking a closer look at auto loan delinquency rates dating back to 1996 reveals a troubling trend. While in October it stood at 6%, it jumped to 6.05% by December. But perhaps even more alarming is the staggering number of student loans due for 40 million borrowers in America. Shockingly, 40% of them didn't make their payments on time. For the 60% who did, it's a temporary reprieve that only serves to deepen their financial woes. So what does all of this spell out for the future? Brace yourselves, because we're headed for a tsunami of delinquencies and defaults on debts and other financial obligations. In the next 90 days, we're likely to witness a staggering surge in defaults, sending shockwaves through the financial system. Repossessions are already on the rise, hitting levels not seen in years, according to recent data from Fitch Ratings. More and more Americans are falling behind on their car payments, reversing the sharp decline seen during the pandemic. In May of 2021, the number of subprime borrowers at least 60 days behind in their car payments hit a 7-year low of 2.58%. But with the inflation soaring, gas prices skyrocketing, and job cuts mounting, that number more than doubled to 5.67% by December of 2022. Travis Sasser, a bankruptcy attorney, has seen firsthand how the surge in car prices has compounded the problem for struggling clients. Monthly payments that were once manageable at $500 are now ballooning to $700 or $800, with some Americans even facing bills upwards of $1,000 per month. It's a shocking bubble that's left many wondering how sustainable it truly is, especially as real wages stagnate and the cost of living skyrockets. In this climate of financial uncertainty, the strategic moves being made by industry giants like Tesla, Ford, and Honda are poised to shake things up even further. With the landscape of the automotive industry rapidly evolving, it's clear that we're in for a wild ride ahead. Just take a look at auto leasing. It's making a comeback in 2024 thanks in part to the rise of electric vehicles. You can now lease a Tesla Model 3 or Y for as low as $329 per month or $399 a month. Compare that to the current situation with used cars, where you're looking at monthly payments of $600 or $700 or even higher for new cars, with the average payment topping $729 per month. Some people are shelling out close to $800 a month just to own a car, but how many can actually afford these hefty payments in 2024, especially considering the tightening credit standards? So what's the alternative? Leasing. With lease specials becoming more attractive and a wave of inventory returning to dealerships as leases from the past few years expire, there's going to be a race to the bottom in used car prices. Things are about to get really interesting in the automotive world. Let's put it into perspective. If you're thinking about buying a $40,000 car today, even with a $10,000 down payment, which is rare, you're looking at monthly payments of over $800. That's more than double what you paid to lease the same car. With car insurance rates skyrocketing by 36% since 2020 and gas prices reaching new highs, the financial burden of car ownership is becoming increasingly unsustainable for many. When you start connecting the dots, it becomes clear that massive headwinds are looming over the auto market. We're facing a perfect storm akin to the 2008 housing crash, but this time it's hitting the automotive industry. However, amidst the chaos, there lies one of the biggest opportunities for those in the market for a new car or lease. Lenders, manufacturers, and dealers will be scrambling to move inventory, offering unprecedented deals and incentives. It's a buyer's market like never before, and those who are prepared to seize the opportunity stand to benefit greatly. The looming question persists. As more people face car repossession, how will they navigate their other financial obligations? Loss of transportation isn't just about getting to work. It's the first domino in a chain of financial strain. Rent, health, insurance, credit card bills, and student loans all become even harder to manage. The surge in layoffs, particularly in tech companies like eBay, Google, and Meta, indicates a broader economic downturn. Small businesses are also feeling the crunch, with bankruptcies on the rise. This ripple effect threatens to destabilize the entire economy. The correlation between stagnant wages, escalating living expenses, and the looming auto market crash underscores a troubling economic landscape. With wages failing to keep pace with the rising cost of living, individuals and families find themselves increasingly stretched thin financially. The prospect of an impending auto market crash adds further strain, threatening to exacerbate existing financial woes. However, within this turmoil lies an opportunity for those with the foresight and adaptability to seize it. In such a precarious environment, the imperative to build and safeguard wealth becomes paramount. Yet, as the auto market teeters on the edge of collapse, the question looms large. Are we teetering on the brink of a catastrophic upheaval that will leave millions financially vulnerable? The potential ramifications for such a crisis are vast, with ripple effects likely to reverberate throughout the broader economy. Amidst the uncertainty and looming challenges, there's an urgent need for proactive measures to mitigate financial risks and capitalize on emerging opportunities. Entrepreneurs, investors, and individuals alike must remain vigilant and adaptable in navigating the shifting economic landscape. By identifying areas of potential growth, diversifying income streams, and prioritizing financial resilience, individuals can position themselves to weather the storm and emerge stronger on the other side. However, the road ahead remains fraught with challenges, requiring a strategic and collaborative approach to navigate the complexities of an uncertain future. For those eyeing used car purchases or business ventures, there are significant opportunities ahead. But accessing funding hinges on having great credit. If you found the video informative and insightful, then don't forget to hit the like button and subscribe to our channel. Also, feel free to share your thoughts in the comments down below.